And welcome back to the Market Wolf. I am the Market Wolf, where I give you the best bear case, the best bull case, and I give you my opinion. Please, if you have not liked this video and you're one of my subs, hit that like button. Let's get this out there. Help me continue to do this. Give me the motivation to continue to make these videos if they are useful to you. I help you, you help me. That's how it works. We got to hit these YouTube algorithms. Now,
before we get started,
the other part of this is please,
does anyone want to get out?
Wait till the end of the video. I really want you to make sure you like this. If you like it, hit the like button and subscribe because I got more of this all the time, every day, day in, day out, 24/7. I'm going on this. So be sure to keep checking me out. Now, everybody thought we were going to pop today. I saw it in the comments section. We've hit the bottom. No, we haven't hit the bottom. In fact, the Market Wolf was once again proven correct.
I want the truth.
Well,
you
I
can't
told you we
handle
were going
the
to bounce
truth.
up, which we did. I told you that we were going to fall through. See, we got rejected by the 50-day EMA. I told you we were going to have a big bounce up here. Well, you know, it's really a pedestrian bounce, let's be honest. But big in terms of what's happening right now. It's really an accumulation zone. And we got rejected. I thought the highest we could get would maybe be up to here. Maybe we come up here and test that channel, remember? But I told you we could be rejected by any one of these EMA lines. We were. We got rejected. We came down. We tried to back test. Failed again. Still stuck in these sub kind of downward channels, descending channels. Very bearish. Everything is bearish. There's bear everywhere. My analysis from yesterday is pretty much the same, except we could say, you know, we're not oversold anymore. We're sitting about average on the 30-minute for the S&P 500. But really, to make an appropriate bear case, an appropriate bull case, we need to look at the DXY today. And I want you to know that the DXY, right now is rolling inverse to the market, okay? So if the DXY goes up, the market goes down. If the DXY goes down, the market goes up. And remember, I gave you that example prior. Look on the 30-minute on the DXY. We've been through this before. I've shown you how it is essentially the inverse. Are the moves proportionally in terms of ratio and percent the same precisely? No, obviously not. But you can see the same general pattern. Remember that big rise up we had on the dollar right here. You know, that would be a dip on the DXY. And then, of course, the inverse would be true, right? So we've got to pay attention to what's going on the dollar. And so really, I want you to see here today, I'm going to give you the bear case and the bull case. I think that let's start with the bull case for the dollar. I think the bull case for the dollar is that you come down here, you back test the 103.780, which it's possibly in the process of doing. We'll have to see. We've lost the 20-day. We're sandwiched between the 20 and the 50. So we back test there. We come back up and we reclaim the 103.910. We build perhaps. We back test without fail, and then we take off, and you start to see these bull flags really kind of all the way up, kind of like how you would see on crypto. You'd see a bull flag, some flagging, then we shoot up again, some flagging, bull flags shoot up, and that's kind of the process you want to see if you are looking for the best bull case, and I believe that is the best bull case. Now, let me give you the bear case, and I believe the bear case is that we could back test here, fail, slip down, okay, the best bear case here, back test, fail, slip down, right, and I think bringing us down to the 103.406 on the dollar. Now remember, this isn't the inverse, so if the dollar goes up on the bull case, the S&P 500 fails, it actually goes down, and that's the bear case for the S&P 500, right? Now, your bear case on the dollar is actually bullish for the S&P 500 because that means money will be circulating back into the market. And so that would probably be the lowest we could go. We got a lot of accumulation zone right here. However, we have back tested this next zone before, and we very well could And it could be a max pain type event where we hit these lower supports and then we work our way back up and then essentially do kind of the similar motion here. Now, this would, of course, happen over a longer period of time. That's just a crappy illustration. So let's take a look down here. I just want to briefly talk about this before I give you my opinion. I think it is possible in the bear case that we could really rip. We could get that dead cat bounce, and that on the bear case you could see where we back test these areas, continue to fall through here, and we test some of these last zones, right, where these last areas through here, where if you were to fail through the last one, then this whole handle fails, and then you would see a rip recovery in the market because the dollar would be back on its way down, right? Because that bullish handle would have failed. Now, I don't think that's what's going to happen with all the bad news in the market, but that's a possibility you have to think about. I think what really happens with this scenario, if it goes all the way down here, that is your dead cat bounce on SPY, okay? And everybody believes the market is back, and then we reclaim these areas. We'll have back tested sufficiently, and when we get here, we will absolutely rip off that 103.910. Now, so that's kind of what the bear and the bull case are saying to me. Now, how about my opinion? Well, I think what's likely to happen, since the S&P 500 is so bearish anyway, is that what we're likely to see is something analogous to this. And this doesn't have to happen all tomorrow. This could happen over a period of time or something similar. But I think we're definitely going to back test 103.776, no doubt about it. I think even tomorrow we could back test 103.600 on the dollar. But I think more than likely we get support there. And if we don't get support there, I think we absolutely end up getting support at 103.44, 103.406. It's just been tested so much in this zone that I just think we bounce from there, we reclaim area, right? We complete a cup here, and then boom, we go bullish, boom, we go bullish, boom, we go bullish. Now, I don't think this bullish case plays out tomorrow. I think what would happen tomorrow is that you would see this case play out, and then perhaps into the following day, we get this second case moving into Friday, right? And what a perfect way to do it, because everybody would be bullish going into Friday off a move like this, especially if we actually broke down another level, which is possible. And then, the market just gets you the other way, right? So that's what I'm thinking. That's what I'm feeling on the S&P 500 when I'm looking at the dollar. I mean, just look at this. It's awful. I think on the DXY, what you're going to see when we do rise, you'll see us probably follow this fib line, this purple fib line up here, and then we'll actually possibly break this channel, right? Complete this big cup, and then have that break down, right? That's probably what would happen for the bull case on the S&P 500, and that would be the inverse of what I just showed you on the DXY. That would be when we were falling down. So, and then of course we've got these levels in no man's land down here, and that's precisely why if the DXY does get support, it's generally right here right now. When on that, it's trying to reclaim essentially this area right here, right? Because this is the inverse on the DXY. This is that top support line, probably right about here. It's probably average, not necessarily always true, but just for where we're at right now. Okay, and so that's kind of what I see. That's what I think. That's what I feel. We get support there on DXY, and we start to put those bull flags in. We're going to get just the opposite here on the S&P 500. We're going to have bear flags all the way down, and the measured move really, if it were to really break, we would probably come down to this fib line. We'd roughly have probably about a 10% correction in the market. That's what I'm thinking. That's what I'm feeling on your best bear case, your best bull case, in my opinion, for the short term and the long term, the rest of this week. please hit the like button. Please subscribe. Please absolutely share. I need help getting this out there. If you like this content, if I'm helping you, I'm scratching your back, please scratch my back. That would be very helpful. We will see you next time on The Market Wolf.